I think this is one of the most important topics that we could cover right now and is equally important to buyers and sellers. So it's arguable whether or not we're still technically in a seller's market. Most people know that we've been in a seller's market for at least the last couple of years, but we can all see that the tides are changing. There are fewer buyers interested in purchasing right now, and others simply are not able to qualify for a mortgage anymore. Not only are fewer buyers actually interested in buying right now, others don't qualify for their mortgage any longer and have had to go continue renting. A lot of this change is due simply to how much the interest rates have risen. For home sellers, this matters as well, particularly for home sellers that need to close quickly. This presents a challenge as sellers are now having to compete to get buyers in their doors and make an offer on their home. For home sellers needing to close quickly, this presents an extra challenge as they're having to compete with every other home seller right now to get buyers in to make an offer. Home sellers who need to sell quick may be tempted to reduce the asking price for their home. For this reason, higher rates can cost sellers just as much as they cost buyers. But there is a way for your mortgage team and your real estate team to work together to create a win-win scenario for everyone involved. And this is what we're talking about: the seller paid rate buy down. I'll be the first to tell you that buy downs are nothing new, but using them in this manner hasn't been such a widespread strategy in many years. It's also no secret that interest rates might not be done going up. As I see this progress, I've also seen buy downs become more of a topic of conversation among home buyers, sellers, and their agents. For buyers who are stretching their mortgage budget to begin with, rising rates could be disastrous. It could even prevent them from buying in the first place if they no longer qualify for their mortgage. So this could come into play in those scenarios as well. So what exactly is a seller paid rate buy down? Lenders allow the seller of a home to credit a portion of their proceeds to the home buyer. This is called a seller concession. Seller concessions can be used to pay a buyer's closing costs only. They cannot be used to help with the down payment. When making an offer on a home, your real estate agent includes how much you as the buyer are asking for in seller concessions. This is actually part of the formal offer in every state I've ever worked in. So even if you weren't aware of it at the time, or if your agent left it blank, it was there and you did have this incorporated into your offer on previous homes. What experienced mortgage and real estate professionals know though, is that seller concessions can also be used to pay mortgage points and buy down the interest rate. The whole idea for the seller paid rate buy down is to get money back from the seller to permanently buy down the interest rate. This more significantly reduces the monthly mortgage payment than a price drop would too. So the cost for each discount point depends entirely on the amount that you, as the borrower, take out on the loan. Each point that a loan borrower pays is equivalent to 1% of the loan amount. For example, a mortgage lender may offer a home buyer a loan, and this loan is $500,000, but they say that if you pay us one discount point, we'll lower the interest rate from, let's say, a 5.5 to a 5% even. So that 1 point of a $500,000 loan is going to be $5,000. At first thought, it might seem like seller paid rate buy downs only benefit the buyer and not the seller, because the seller is receiving less money, right? However, it was actually sellers with savvy agents that I saw in recent weeks use this strategy. With today's rising interest rates, affordability is getting tighter and leading to fewer mortgage applications, especially for those higher priced homes. Simply, this means that for the first time in a couple of years, sellers are competing with each other for their buyers. When this is the case, the go-to solution is for the seller to reduce the asking price of the home. But this is actually not the best way to go. A seller paid rate buy down will actually result in more profit for both the buyer and the seller. Although it's the buyer that directly benefits from the buy down, the buyer isn't always the one that pays for it. Sellers and builders can also be responsible for purchasing points to lower the buyer's interest rate. So we're going to take a look at how that's possible. Look at this table that I put together. This is a sample of a loan comparison showing options for purchasing a $500,000 home using a 30-year fixed rate mortgage at a 5.5% interest rate. Take a look at how this would change if the seller reduced the price of the home by $10,000. This change would result in some savings for the buyer, but the required monthly payment is only $45 lower. So this strategy would also reduce the seller's net profit by 10 grand, a pretty considerable amount, right? If the seller lowers by that amount but still doesn't have any buyers making an offer, then they might lower it again. So the seller might have dropped it by 10,000 to start with, and then they drop it by another 10 for a total of a 20 grand price cut. But even that doesn't even lower the buyer's payment by $100 from the original price. Now let's look at what happened if the seller doesn't reduce the purchase price, but instead pays a discount point for the buyer, which lowers the interest rate by 0.5%. Not only would this scenario of simply $4,000 in seller concessions reduce the buyer's monthly payment, but it's going to reduce it more than that price drop of $20,000. And it's going to increase the profit the seller makes by $16,000 compared to that. Yeah, you heard that correctly. The sellers can leave with more money and the buyer can have a lower payment, all without actually reducing the price of the home. So to take it a step further, the bottom row of our next comparison shows how much the seller would actually have to reduce the price of the home to reach the same monthly payment as the rate buy down strategy. That's $27,000, which is nearly 7 times the cost of the price reduction. And finally, by reducing the interest rate, the buyer will realize more savings over the life of their loan, not just up front in the first few months. So negotiations about price and seller concessions, as we mentioned, are part of every real estate transaction. But what a lot of people don't realize, and you now do, is that a seller paid rate buy down strategy offers more benefits for all the parties involved in the long run. So what have we learned? We've learned that offering a below market interest rate for the property will entice more buyers. We've learned that this saves the seller money up front and it saves the buyer money every month. It also helps hold home values for the area, whereas price decreases don't. And for the seller, it avoids the stigma of a price reduction. So absolutely reach out. Call, message, email, text message, direct message, whatever it is. We'll be happy to build custom figures for your scenario. And that never costs anything for us to do. Just a note, these hypothetical monthly mortgage payments are principal and interest amounts rounded to the nearest dollar and don't include taxes, insurance, or mortgage insurance as applicable. So what do you guys think? You have questions? I want you to ask. Did I miss anything? What do you think of this strategy? Let us know. Call, text, email, anytime. See you soon.